Hi, I'm Richard Vague. Today we have positive news, positive in that it is boring news. In the midst of the recent wild gyrations in bank stocks resulting from the SVB collapse, which came from the grotesque mismanagement of asset and liability matching shown not just by SVB, but other banks in the industry as well, and which has resulted in problematic deposit outflows from smaller banks. The credit quality news, at least, is relatively benign, since there has been a slight leveling off of U.S. private sector debt growth in 2022. To us, that means lenders have not been overlending, and that's a positive. And it also means, by implication, that GDP growth will be somewhat slower at best, since private sector lending is a primary driver of GDP growth. Overall, private sector debt rose by $2.2 trillion in 2022, right on par with the $2.2 trillion in growth in 2021, which, since GDP, the denominator is growing, meant that the private debt to GDP ratio went down slightly from 163% in 2021 to 158% of GDP in 2022. Business debt grew by $1.2 trillion, up slightly from $1.0 trillion in 2021. But household debt, including mortgages, grew by only $1 trillion, down from $1.2 trillion in 2021. Commercial real estate debt grew by $450 billion, and that's up from $380 billion last year. And that's an area we continue to worry about with the impact of the pandemic, especially on the commercial office sector, and our fear that there's overcapacity in that sector now. Private placement lending, another area we have worried about, is actually down slightly in growth, an appropriate trend given the overlending that occurred in that sector over the last few years. Student debt growth continues to moderate, growing only $24 billion in 2022 as compared to $39 billion in the prior year and $71 billion as recently as 2019. Margin debt was actually down significantly, declining to by $300 billion from last year's level, a helpful trend given that overall stock market levels are in question, and we're seeing the opposite trend in equity-linked derivative growth, which we commented on recently. Credit card debt, which is always one that folks focus on, is up considerably by $130 billion as compared to $37 billion the previous year. But keep in mind, credit card debt is a very small slice of the overall private sector debt pie, and therefore one we generally don't get too worried about even when it grows at that level. Even federal government debt growth is down in 2022, and that's one we don't pay as much attention to as private sector debt growth, but it grew only $1.3 trillion as compared to $1.9 trillion in 2021, which meant the government debt ratio went from 127% in 2021, or from 127% in 2021 to 124% in 2022. Keep a couple of things in mind. First, debt is almost always going to grow. If it didn't, GDP growth itself would come to a halt or reverse, since debt growth, primarily private sector debt growth, is what causes GDP to grow. The key thing to know is how much it is growing in ratio to GDP. And since debt is always growing, you will routinely hear new debt totals reported as record levels by reporters. Now, whether those reporters realize it or not, that's really the appropriate norm, just as almost every GDP number could be reported as a record level. But since folks understand that phenomenon as it relates to GDP, it doesn't get expressed that way. What most folks don't focus on is that when debt contracts, that's the point we have economic issues, because if it did, GDP would contract as well. As always, we're looking for that happy Goldilocks medium. Things go best when overall debt growth, private and government, is neither too fast nor too slow. That's it for this week. Thanks.